Afternoon. Are we ready now? Perhaps I can just take the opportunity to... Can you hear me? We also have participants online. I just want to confirm if they can hear us. All right. Okay. Once again, good afternoon. My name is Phineas Mutota. I'm the chairperson of the Board of Trustees for the NMC Fund. And I would just like to take this moment to welcome you all. First and foremost, I want to welcome the members who are present here today and those that are joining us online. And I'll also take the opportunity to welcome my fellow Board of Trustee members, the fund service providers. This includes the investment consultant, actuaries, I3, our auditors, the administrator. We also want to extend a special welcome to representatives of NAMAF, Mr. Chiuro, Namfisa, the regulator of the industry, is also here, Mr. Gariseb. Last but not least, NMC staff members, and everybody who's joining us for this AGM. I'm informed that we do make a quorum now. In a matter of seconds, we move from 200 to 400 members because of one of the members who had proxies actually joined us. So we are very thankful for that. So with those few words of welcoming, allow me then just to ask Alison to make sure that the meeting is properly constituted.
Thank you very much. My name is Alison Begley. I'm the Principal Officer of NMC. According to our rules, as I've now mentioned 3 times, we need to have 200 attendees. And I can proudly say we now have 406. We were waiting for the one who had 206, and that person has arrived. In order to constitute the meeting, we now have a quorum. I just need to let you know which publications the notice of this meeting was in. As you can see on the screen, it's perfectly clear. Social media, Facebook, Instagram posts, the website, Republican, Allgemeine Zeitung, Namibia Sun, the Namibian and bulk Zoom SMSs. So I now constitute the meeting as open. Thank you.
So we have dealt with agenda item 1.2. We move on to agenda item 1.3, which is the approval of the minutes of the 2022 AGM meeting. As indicated, the minutes were also posted or shared on the NMC social medias. But I'm sure you have had an opportunity to go through them while we were waiting for the meeting to start. Perhaps then we can then move that we approve the minutes of the meeting. Thank you. Having dealt with agenda item 1.3, we move to agenda item 1.4. This is the chairperson's and the administrator's report. So, being the chairperson and at the same time convening this meeting, it gives me great pleasure then to do the chairperson's report. If you can just indulge with me, allow me to present an overview of the fund summarized operation for the past year. Although the fund is in a sound financial position, it is important to highlight that the reduction in solvency level from 34% for the period 2021 to 26.5% for the period 2022 remains a big concern and threatens the sustainability of the fund. The net contribution the net contribution income of 1.6 billion received for the year 2022 was not sufficient to cover the net claims and expenses of 1.7 billion, resulting in an operating deficit of 129 million. NMC did, however, manage to slightly reduce the expenses ratio to 9.1% of total contribution in 2022. This reduction from 9.4 to 9.1, the 9.4 was 2021, and then the expenses in 2022 was 9.1. The open funds industry averaged around 11.4%, and we are proud, or we are then reporting that over the past 5 years we maintained this ratio below 10%. The net income generated from our investment assets amounted to 28 million, which reduced the losses to a net deficit of 101 million for the financial year. In comparison, and due to several factors, claims excluding expenses increased by 6% during the year. We've indicated the 1.6 of 2022, while income contribution only increased by 5%. So if expenditure have increased by 6% and our income only increased by 5%, you can already see that there could be a deficit there. And hence, while we are reporting the concern that the Board of Trustees have in terms of solvency ratios. The total principal members of the fund increased by 4.2% from 30,113 at the end of 2021 to 31,387 at the end of 2022. While the average industry principal member only increased by 2.4. This is also an indication that the fund has grown with 4.2%, while the industry or the rest of the other funds have only grown by about 2.4. The fund, we believe and we are confident that the fund continue to actively engage in marketing activities to attract and retain members. Life post-COVID, as we all know, it has been tough, and while experts say there are signs of recovery, unfortunately the average citizen continue to feel the pinch of the rise of prices of goods and services. The Bank of Namibia recently raised its benchmark repo rate by another 0.5 BPS to 7.75% at its June 2023 meeting. This effectively brings the prime lending rate to 11.5% and the mortgage lending rate to 12.5%, respectively. This does not help efforts by the medical aid funding industry to realize sustainability and affordability. Many members are faced with a hard decision, having to choose between providing for their families or paying to have a medical aid cover. Despite all this, the Board of Trustees, management of NMC, together with its key stakeholders, remain determined to grow the fund in a sustainable and affordable manner. Last but not least, the Board of Trustees would like to thank all members for their continued trust as we work together to deliver on the promise and ensure a sustainable fund for the benefit of the members. we, the Board of Trustees, management of NMC, we call on your continued support as we take on new and innovative solutions to ensure the sustainability of the fund. I thank you. With that statement, there's not much that speaks in terms of positivity, but I think as we are saying that we remain confident and that we will ensure the sustainability of the fund, we are working very hard. So we remain reliant on the support of the members of the fund. So not much seems to be good news, but I think this is the type of news that we hear every day. With that being said, I would just like to call the representative of MedHealth to come and do their report. Joanne is here. Our administrator, MedHealth, will then do the administrator's report.
If I may ask some of the people sitting at the back to please move forward. It's a request from the table during the recording. Would you mind moving just a little bit forward, please? I know it's like school, right, to sit at the back and only listen to the front, but please just move forward. Thank you.
I have short syndrome, so I'll just stand on my toes. I can't. Ah, there we go. Good? No. Thank you. Thanks, Phineas. Okay, so on behalf of MedHealth and the administrators and our CEO, Mr. Florian Malungu, I'm happy to read our report to you. Following years of uncertainty due to the global pandemic that proved to be one of the most challenging events in the century, MedHealth and the administrators prepared to push through and address every hurdle that lay ahead. We persevered and adapted to major changes, ensuring better service to take care of member and health professional requests and claims. We extend our gratitude to our employees for their continued consistent service delivery and the NMC Board of Trustees and the NMC office and all stakeholders for their continued support and trust. MedHealth remains committed to finding solutions in the best interest of members and NMC in an ever-changing and challenging environment. We'd also just like to use this opportunity. It is Mrs. Alison Begley, our Principal Officer, her last year at NMC. We'd like to thank her for the 11 years that she's put into NMC, for her support, her trust. We've really appreciated it. She's really managed the fund very well. We've had a great relationship with her. Sometimes we fought, but I'd just like to say thank you very much to her, and we wish her all the best on the new journey that she's embarking on.
Thank you, Joanne. It seems like we are going to be done almost just now. We are halfway through the agenda. Agenda item 1.5 is the review by the actuaries. I3, Mweneni, are you here?
Thank you. Good afternoon, everyone. My name is Mweneni Mungei from I3 Actuaries and Consultants. We are the fund consultants and actuaries, and I will take you through the actuarial review for the year that have ended December 2022, and also just give you an overview of the forecast into 2023. The chairperson have mainly mentioned the highlights of the year and what really happened. I'm just going to probably elaborate a little bit more or spice it up where I can. But I think the picture is quite there. It's quite clear. The sustainability of the funds are mainly under threat because of the higher claims that came through that are higher than the contribution incomes that are coming through. So your contribution income, as we understand the operations of the medical aid fund, so it's basically the contributions that we are contributing as a members of the medical aid fund that funds the claims that we're incurring, and then the expenses of the fund. So there is no profit made elsewhere. The surplus that will remain is actually meant for the funds to carry out the fund during the heavier years, like what we could see from 2021, for argument's sake. That is what we will expect your fund to do for you during the COVID year, where you have high claims coming through. But then the expectations, that's just not managing my mic well. The expectations were then that getting into 2022, ideally we will start recovering and your claims should be manageable. But what we have seen then for 2022, we still have high claims coming through, and that is also where now the threat is coming through. Can I use this to go slide on slide? Okay. That is just the history of the fund, looking at the fund for the past 7 years, just a performance in total, where it's basically an extension of my previous slide, but we're now looking at earlier years as well. And just to give us an indication of how the trends are actually going along, we see how we moving from the blue bar being our contributions, but then that blue bar is actually moving very close to our claims, meaning that we are actually not having sufficient money. The contribution is actually not sufficient to cover our expenses. So ideally you would want the gap between your blue bar and your green bar to be the same height or something bigger than the gray bar, which is your expenses. So on top of your contribution, on top of your claims, you should be able to cover your expenses. But that is a challenge that we're seeing. And just comparing ourselves to the industry, I think the chairman also mentioned a comparison to the industry. The red bar is our solvency ratio. The solvency is a percentage of reserve that you keep, your reserve amount as a percentage of your contribution. So ideally by regulation and by NAMFISA, the guideline is that the solvency level should be about 25%. NMC over the years managed to make that their own target to actually maintain it at 30%. And that have been going well until we start dropping. We see the drop coming down in 2021 and 2022. And the 2022 actually dropped to about 26%, which is slightly just above the NAMFISA guideline of 25%. So, but what we could also see from there is the expense ratio. Sorry, if you can just go back to the previous slide. Which is also what the chairperson have highlighted, is the fund at least managed to keep the expense ratio below 10%, which also have been consistently below what an industry's expenses ratio is. And the claims ratio have been higher than the industry, which just indicates that the proportion of your contributions that goes through to your claims is higher than the industry. So that is quite a positive a positive performance from NMC's side, like you're literally giving back to the members the money into claims. In terms of the membership, we have seen the membership growing in the last, especially the last 2 years. We had a slight reduction in membership during the 2020, which is mostly where there is the lockdowns, the retrenchments and all that happens, but eventually NMC picked up after that, and the growth is it's also higher than what the industry have experienced. And typically on your growth of the fund, that's quite an important aspect of your fund. You would want to grow to increase your risk pool. The more the members that you have there, the bigger your risk pool. And when you have a higher one member claiming high, then at least the other member will be claiming low. So you are actually diluting your risk pool well. So it is an intention of the fund to actually continue growing this member base so that it can sustain itself, or it sustains its liability over a longer term. Now, looking at the benefit and contribution, that is usually where most of the members' interest is. You always ask why my benefits and my contribution, my benefit increase, why my contributions aren't, and all that. But the previous slides also partially touch on that. We could actually see the need of increase in contribution given the deficit that we are experiencing. And then on a yearly basis, we do the pricing and benefit review, which is mostly looking into what is your current benefits, where can we improve on the benefit side, and then from our end, from the funds actuary, we'll then need to look into the costing of the proposals that comes through from the members of what is the expected cost of this benefit, and what is where do we actually generate this from? And that is normally where at times you will see the proposed, not all the proposed benefits are coming through, because the trustees will then sit and make a decision based on the affordability, which benefits to take into account and all that. If we look into the 2022, there was a contribution increase of 9.85%, and that increase on the pricing, on the modeling, ideally we are allowing for an increase in inflation, which is now your tariff increases. The fact that you're going to pay the doctors and all the service providers' fees are going to increase. We also allows for a percentage increase in utilization, just the increase in use of services. And then given the situation where we're in, the fact that the reserves are actually in deficit, then the contribution will then allow for an additional increase that will then cover for the deficit, so that you start closing the gap between the deficit between your claims and your contributions. So, but so that was the pricing for last year, and that is normally where it's a principle of pricing on an annual basis. So going forward, we still expect to see something similar, where we're looking at what is the expected increase in tariff and utilization and all that, and that will then drive what the recommended contribution increase is going to be. But the objective is literally to get to a point where your contribution for the year is sufficient to cover for your claims and expenses. So now looking into 2023, I think we did see how 2022 ended up with a deficit. So just maybe touching on the pricing again, that we then look into, when you're pricing, you're actually looking at the future of the next year. What is the expected claims that we expect to come through, and the contributions that we expect to come through? So from where we're sitting when we did the pricing, we were expecting the claims and contributions as per the middle table. And what we have for the first quarter is now what we have on the Q1. And what we could actually see there is that the claims continue to be higher than what we budgeted for, despite the 9.85% that was passed across in the previous year. The contributions came out quite in line with the budget as well as the expenses, but then the claims are actually higher than the budget. Investment income also quite positive and strong. I think Kobus will touch on the investment income in the next presentation, but that was quite positive for the quarter. But overall, the projection for the year was to at least end up with an underwriting deficit of about 41 million. But currently for the first quarter, we're already at 61 million. So that just gives a picture that by the end of the year, we might actually end up with quite a higher deficit than what we have initially priced for. So that is just an indication of the different, the claims profile of NMC, that for the first quarter, where most of the money was spent at, and the cost per member per month. But what we're also showing on there is the comparison of the claims for 2021 versus what we have budgeted for and versus what actually happened. The gray bar, that is now the 2021 experience. Now one could actually clearly see how we moved from the 2022 experience to the first quarter. So there is quite what we have initially anticipated is just an increase of about 6-7%. We're actually seeing about 12% increase from 2012. So that just actually sends a message that we also need to look into our claim management in order to bring our claims in line with the budget. And just in conclusion then, I think having said and having seen the state of the fund, we are still positive on the financial position of the fund. We have seen also from the previous slides that the trends that we are seeing is also what the industry is experiencing, so it's not an NMC's issue. We see the solvency decreasing for the rest of the other funds, so there is quite a lot of overall industry effort that needs to get into this to just make sure that we maintain or we bring the claims under control, because we cannot continue chasing the increase in claims with the increase in contributions. It will get to a point where it becomes unsustainable. So there is quite industry drive, and from the fund level as well, fund level drive to just maintain the claims or to reduce the fraud and wastage and all the other strategies in place just to ensure that our claims are not running away as currently it's happening. So with that, I think it's just a call also to just, okay, but that's still fine. It's just also a call from the members to actually get a better understanding of the usage of benefits, the impact of the increase in claims on your contributions, so that once we actually manage our contributions better, then we manage our claims better, the funds will be able to accord lower contribution growth, because obviously the objective of the fund will be to cover your medical expenses. Should the premium not be sufficient to cover that, then one will have to grant a premium increase for that. So the current move of the industry is more into looking into managing your claims so that you won't be chasing the ongoing increase in claims with higher contribution increases. But we remain positive that the fund can retain the financial sustainability, and what is currently being experienced by NMC is also what the rest of the other funds is experiencing. So it's not a concern by NMC alone, it's actually a general industry concern on the ongoing increase in claims. So I think with that was my story, unless there is any question also on my presentation. Thank you, Chair.
Thank you, Mweneni, for the overview. We then move to the next item. This is an overview of our performance, or the performance of our investment. Kobes is going to take us through and then also just highlight some of the issues, or those issues that are affecting our investments. Of course, from our investment we do get returns, and as indicated, the returns can also assist in situations where our claims are a bit higher than expected. Kobes, the floor is yours.
Ladies and gentlemen, good afternoon. Thank you very much, Mr. Chair. Thank you very much. I think you've really hit the nail on the head with your opening remarks, that life has really been tough after COVID. And yes, we're sitting here today, we can have an AGM face to face. There's no social distancing, no mask. But from an economic perspective, from a market's perspective, we're still sitting with COVID in our midst. We're still suffering because of the events that happened during COVID from economic side. we're still sitting with COVID, and we're still struggling to get finally rid of COVID from the market side. And ladies and gentlemen, that was predominantly as a result of what inflation, the impact that inflation is currently having, and the actions that has been taken to curb inflation. What happened during COVID, if you can go to the next slide, please. Remember, we went on lockdown. It seems like quite a long time ago, but it was like 3 years ago. This time we were locked down. You were not allowed to move out, and then there was some relaxations, etc. But in order to support the economy, your global markets, your US, your Europes, all of them, they had the fiscal luxury. They could have made billions and billions and billions of dollars available to keep on supporting their markets, to keep liquidity in the market, and to keep the market going. For instance, in the US, you can see how the amount of money that was spent actually printed by those central banks to support the economies. In the US, for instance, you got a check of $1,500 through the post. And you could then use that money for whatever you wanted to. If you wanted to go to the local Walmart and go and buy a new flat screen TV, you could have done so. If you wanted to invest it, you could have done so. If you wanted to go and pay off debt, you could have done so. It was money that was made available. It was printed money in the market. We, of course, know, for us and the rest of the emerging markets, we didn't have that luxury. Our relief came basically from the Bank of Namibia that reduced interest rates quite aggressively during that period. So that released a little bit of cash flow. We had a little bit of more money to spend at the end of the day. The $750 that was made available by the Social Security Commission definitely didn't make a huge impact as we've seen offshore. Now, if you look at the next slide, this is just to show you. This is the US Fed, the Federal Bank, their Bank of Namibia. And this is just their balance sheet, just to put it into context. Now, if you look at, just don't want to. If you look in 2008, with the global financial crisis, similar events or similar reaction from the Fed, they called it quantitative easing at that stage, bailing out banks, etc. This time around, they called it stimulus packages. But just look how different, how small what we've seen in 2008 compared to 2020, 2021, 22, how significantly more money was made available during that period. It is exuberant amount of money that was made available during this as a result of the lockdowns for these stimulus packages. Now, when we started opening up, if you go to the next slide, it was further, inflation was then further fueled by supply chain constraints. Keep in mind, the economy was locked down for 12 months. You do not just open up again and then all of your products is available to be sold. You first need to have to manufacture it, you had to order it, it had to be shipped. And you saw these big container ships, for instance, lying at anchor for weeks before they could offload. And we all know what is the supply demand. It will also push up prices even further. And then if you go to the next slide, you then start seeing inflation going to record high levels. In the UK, in excess of 10%, US also 9%. For us here, I think we grow up in an environment of high interest rates. Those of you in the room that have been through the 1995s, etc., where you had prime rate of 22%, this is nothing new for us. But remember, if you are used to inflation of 2% and all of a sudden it goes to 8-9%, it has got a traumatic experience, and it has massive impacts then on the markets as well. And the market's immediate reaction, next slide. So how do you curb inflation? You start raising interest rates. And that is why we've seen this aggressive interest rates hikes by your central banks over the last 18 months. So we initially, your central banks thought when inflation is starting to increase that it's going to be transitory. In other words, short term. It seemed to be more persistent, longer term. So they had to then aggressively start raising interest rates. And as the chairperson then have also alluded to in his opening remarks, last week, Thursday, we saw another 50 basis points hikes in our interest rates here in Namibia as well. And ladies and gentlemen, unfortunately, the bad news is that if all things just stay equal for the rest of the year, no further escalations in terms of turmoil and geopolitical issues, etc., we're not going to expect any interest rate hikes, cuts very soon. Hopefully, this has been the last interest rate hike for this year, and that if, well, as I said, if all things then stay equal, that we can start seeing interest rate reductions towards the middle part of beginning of next year. So at least some positive signs that inflation is starting to trend downwards, both here as well as globally, but it's still at record high levels. So like the US Federal Reserve Bank also said, they're not taking their foot off the pedal, but they're just pausing currently further interest rate hikes. And as I said, hopefully this last 50 basis points is then also the last hike for this year at least. Next slide. Next slide. So what we've already started seeing is that your banking sector, especially in the US, some of you might recall not that long ago Silicon Valley Bank, we became under financial difficulty. And that was as a result of the reserves being invested in government bonds, US bonds. And we all know that if interest rate goes up, the price of the bond, or value of the bond comes down. So the reserve levels drop below the requirement. They had to raise more money. The customers panicked because they thought that the bank will not be able to honor their deposits. Everybody went to the bank, withdrew their money, and the bank went bust. At least the positive, Mr. Chair, ladies and gentlemen, is that it seems to be only been contained or only to a couple of banks in the US, and that it's not a contagion effect like we've seen, for instance, in 2008 with the global financial crisis. And then we all know in February last year, which initially just started as military exercises on the border by Russia, border of Ukraine, then went into a full invasion. We currently see that we're still seeing the turmoil, and we know it's going to be a protracted turmoil. And what makes, although Russia is only 2% of the world economy, but what makes Russia and Ukraine very important is that about 30% of the world's wheat production and about 30% of the world's fertilizer production is coming from those two countries. And obviously with sanctions and no longer being able to work the crops, etc., that will put further pressure on the price of those commodities. And what does that do? It also puts further pressure on inflation. So that had a further negative impact on inflation blowing out. And unfortunately, or the reality is that most of that wheat that is being exported or produced by Ukraine and Russia was exported to developing countries like Africa. So it had a massive impact on our daily lives. And I mean, all of us, it was with inflation, what was especially scary with inflation, or still is that if food inflation was in excess of 20%, it was at record levels. I mean, it was basic foodstuffs, cooking oil, sunflower, maize meal, things that we all use on a daily basis. So with rising interest rates, we had less to spend at the end of the month because we had to pay more for our bonds to service our debt. And we could buy less for our 100 Namibian dollars because the price of those goods kept on going up. So you're sitting with a very, very vulnerable consumer at the moment in Namibia and in the world, for that matter. And as I said, unfortunately, we'll have to keep on tightening the belts at least for the rest of the year because of the interest rates not going to come down very quickly. What makes obviously the whole Russia-Ukraine situation more critical potentially is if you look at the blue countries, that is your NATO countries, and how quickly this turmoil could potentially spill over to one of those countries, and then you've got the US and you've got all of these global powers becoming involved, and then you sit at the back, you're sitting with China, that of course would love to do to Taiwan what Russia did to Ukraine. And the US came out on a couple of occasions already and said, but they will militarily defend Taiwan if there is any attack on them. And then you sit with two massive global powers, two Alsatians at one another's throats. And Taiwan is especially important because all of these computer chips, our semiconductors that's being used in motor cars, etc., the majority of that is coming from China. So there's still a lot of geopolitical uncertainty at the moment as well. What at least, you can also go to the next slide, at least what last year up until the end of September, we were really in in negative territory from a fund's performance perspective, because you had all of these things, inflation running away, interest rates being kept on aggressively hiked, the turmoil, etc. So markets were really under pressure up until September. Fortunately, with China opening up, and China, very important from a global perspective because they're the second largest economy in the world. And ladies and gentlemen, they had the most draconian COVID harsh lockdowns for 3 years. It was only towards the end of last year where they started opening up again. And I mean, it was not like we had still some freedom here in Namibia during COVID. You could still move around. It was harsh lockdown, 24 million people in a city. Half of the city this side of the river for 2 weeks, and the other side another 2 weeks. And remember, in China, if you're caught on the street, you disappear. There's no questions asked. Then you permanently locked down. So very harsh lockdown. And why China's consumption and their growth and what they do from an economic perspective is so important is because their size in the global economy, being the second largest economy. To give you an idea, 60% of luxury watches that's being purchased is being purchased by Chinese. 80% of these luxury handbags, ladies' handbags, Louis Vuitton, I don't know what would call all of them, 80% of them being consumed, being bought by Chinese. So now you can imagine that big market sitting, they're not allowed to travel, they're not spending. Obviously it will have an impact. Where do we export most of our resources to? China. Where from we import most of our goods? China. So if your biggest client is not buying as much and is not, you cannot order your goods from them, obviously it would have had a negative impact. But at least with China opening up, that I almost want to say saved our year, and we could then end the year in positive territory from a performance perspective. Overall, 2022, a very tough year for paper assets. It was in US dollars terms only resources, oil, and then Namibian bonds, Namibian shares that gave us positive returns during last year. All of your other asset classes gave you negative returns during that period. And the challenge for the fund was to get a mix of a portfolio together, or managers together, that had exposure to all of these different markets, so that you firstly could have absorbed your risk, but then also to have given positive returns at the end of the day. Looking a little bit forward, what do we expect for the rest of the year? Mweni also alluded to it. At least the first quarter of this year, first 5 months this year, looking a lot better than that we've seen last year from a performance perspective. Challenges, however, still remain inflation. Ladies and gentlemen, as people with bonds, and I'm sure most of us in this room do have bonds, cars, etc., that we need to service. The first thing, if you're not a financial expert and you open up the newspapers, look at what inflation is doing. Inflation is going to be the key driver of what central banks can do in terms of interest rates. And as I said, there's positive. Inflation seems to be tapering off. Namibia's latest inflation 6.4%, but it's still not within the targeted range. And as I said, that will be key for us to get inflation under control. Initially, talk of a recession, but at least I think that fears have softened a bit, and then we will see lower growth than expected for 2023, but not a deep recession than was initially anticipated in the beginning of the year. Next slide. We spoke about the turmoil, the potential geopolitical risk between China and the US considering Taiwan. And then also just some positive news. At least, ladies and gentlemen, we're looking a lot better than our brothers down south. Unfortunately, as we all know, we're also still very reliant on them, because our Namibian dollar is linked to the South African rand. Our monetary policy is linked to the South African, basically the South African Reserve Bank. So whatever happens in South Africa, whatever is being said by politicians, leaders, etc., have a direct impact on us sitting here in Windhoek as well. Because the moment the rand moves, our Namibian dollar also moves equally. But just some positive news on the Namibian side, and especially on the oil side, and maybe I just got 2 slides for you, just to put it in perspective, to try and conceptualize the potential impact of this oil find. This slide just gives you an idea of the black bar. That is the amount of money, 5.4 billion Namibian dollars, that Total Energies this year is going to spend in Namibia in terms of oil exploration. It's half of their global budget that is being spent on oil exploration here in Namibia this year. If you compare that, the market cap of First Rand, for instance, if you take all of the value of First Rand, if one can put it like that, that's 9.7 billion Namibian dollars. Capricorn, 6.9 billion, and MTC, 2.1 billion. 5.1 billion Namibian dollars being spent on oil exploration. You just drive up this road, Ulan Street, or it's now Kenneth Kaunda, you will pass the American Embassy, which is now close to completion. That is, in per square foot, the biggest American embassy in Africa that is being built here down the road. We already, the Chinese, their size of the embassy, the Russians. France is upgrading their embassy from consulate status to full embassy status. Now why all of a sudden, well, not all of a sudden, but I think we are just a little bit still, we as Namibians, we don't trust this oil thing. The rest of the world has got a different view on this. And yes, ladies and gentlemen, things will not happen overnight. It will be a 5-10 years. But this is a potential game changer for Namibia, and will change Namibia forever. If you go to the next slide, this is just some assumptions or some figures that have been being put forward. If you take Namibia's GDP, so the size of our economy in US dollars, it's about 1.1 billion, 11 billion US dollars. That's the size of our economy. If 5 million barrels of oil is exported, the income from that is 350 billion US. 10 million barrels, it is 700 billion US dollar. It pales in comparison to the size of our economy at the moment. And we're only talking about oil. Green hydrogen, the mining sectors are doing well, finds of lithium and all of that. So there's a lot of positivity. There's a lot of, I think, potential in Namibia, where we look a lot better, and we're in a much, much better state than a lot of other countries in the world. And this could be potential game changers. Unfortunately, as one of the experts the other day commented, that oil, unfortunately for Africa, is both a blessing as well as a curse. But let's see. Finally, Ben only offered or said I must use 15 minutes. I'm trying to stick to that. So the last couple of slides. And just can you imagine if that inflow comes into the economy, what will it mean for unemployment? And we're only 2.4 million people. It could make a massive difference in everybody's lives because the downstreaming from the oil finds and exploration will be massive, whatever industry. And we spoke about that yesterday, is already for the fund to say, but how are we going to make use this opportunity? What opportunities are there for the fund now already? What should we do from a strategy point of view to explore the possibilities to the benefit of the fund and then obviously of all of the members? Last two is just, I've alluded to our dependence on South Africa. And yeah, if you look at the next slide, did they, didn't they? We don't know. There's now a commission appointed. And why this is important, ladies and gentlemen, is you can remember, or just look at what the currency did when the ambassador just said there's this potential for the exporting of arms to Russia. The currency went from 18 to close to 20 in one day. It was just like that. Now, we spoke about earlier inflation being our biggest risk, our biggest concern. If the currency should go to 20, we need to buy our oil in US dollars. We're importing everything, transport costs, everything. So the currency will then have a negative impact on your inflation. What does inflation do? If inflation picks up again, Bank of Namibia needs to raise interest rates again. So therefore our economical umbilical cord with South Africa and what is being said and being done down south impacts us directly. And then the load shedding issue is obviously now for the last 3 years. Fortunately, we're getting a lot of our power at the moment from Zambia, from Cabora Bassa, and from Ruakana, and is not totally reliant on Eskom alone. And then finally, that is also, if all of these issues, if you look at the next slide, unfortunately, or the reality is that the South African rand, the Namibian dollar, was the third worst performing currency during the first quarter of this year. And what is a currency? A currency is the price of a country. It shows the confidence that your international investors will have in investing in you. It's the price of your business, basically. And we are third because of South Africa. It is only the Argentina peso and the Russian ruble that did worse. So just again, it shows you how exposed, how fragile we are in this regard. And then just in terms of the fund's performance, total assets as at the end of December, 574 million Namibian dollars. Current investment managers, Sanlam, Old Mutual, MNG, that's the old Prudential, and then also Namibia Asset Managers. If we look at the next slide, as was alluded to by Mweni and the chairperson, unfortunately for medical aid funds, last year was a double whammy because you had more than expected claims and your investment performances were also under pressure. The previous year, at least investment performances were able to absorb some of those negative impact on the reserves because we had a very good return. But last year, our investment performances were also under pressure. And on top of that, you had then also your claims being much more than expected. And that resulted in the current reserve dropping below its intended 30%, what was the aim of the fund. And then if we look at the returns, as I said, 2021, 11.79%, and last year only 4.76% as a result of all of these. But I think even considering this, all of this turmoil, and last year being one of the worst years on the market side, the fund has been able to absorb, because of its investment strategy of having diversified portfolio, different styles of managers, invested in different geographical areas, and then also in different underlying assets, has been able to absorb and still add value. And then the last two slides, this is just the returns up until the end of March. So just for the first 3 months, and you can see we're already sitting at 3.25%. So almost close to what we did for the whole of last year. So let's just hope that this momentum continue, that there's no further escalations of existing turmoil or new geopolitical issues. And as I said the other day or yesterday, if we can just send the politicians home for the next 6 months and say, please just let the economy now sort things out, then we will be in a much better place. So, ladies and gentlemen, I don't know if there's any questions. I thank you. Please feel free if there's any questions. Thank you.
Yeah, ladies and gentlemen, that is it. That is the performance of our investment, and that is just a quick trip or just a quick overview of the world or the global economic performance and what is happening. The reason why we are presenting this is that it does have an impact on our investments. And at the end of the day, those investments, we want them to perform and give us returns. And with those returns, we can then also assist in terms of our claims and in terms of our future contributions, so that we do not need to increase to unnecessarily. But as you can see, those returns are also under pressure. So all the income that we can get is very important. But as we've indicated, we remain committed, and we trust that our members will support us during these times. We move on to the next agenda item. This is the approval of the annual financial statement for the period ended December 2022. The draft was then circulated. By circulation, we mean that it was uploaded on the fund's website, and when you have received the invitation or the notification, when was it, Jessica? Oh, all right. Just maybe to finalize on that one, the financial statements, the draft were submitted, they were uploaded on the website yesterday, on Monday. The idea of uploading them on the website is that the members get an opportunity also then to have a look at them. So at yesterday's Board of Trustees meeting, it was then also resolved that the financial statements be presented at today's AGM for final approval. So these financial statements were compiled by EY, and as indicated or as being proposed, that the Board of Trustees are confident and that we are satisfied with the financial statements being put to you for approval. Before we go into the approval, perhaps we can then just take the question on which is online. If it is related to Kobe's presentation, but let us hear.
Good afternoon.
Yes, afternoon.
Okay, my question was actually supposed to be raised earlier, but just thank you to Chorus and all the presenters. this is really detailed and yeah, need to know, not need to understand sometimes. And yeah, also to Clovis, if there's nobody that is available or have time to print the money, I have time this weekend. I can print the money for us if needed. But yeah, basically, maybe just if I can be directed to where to raise my question, because I actually would love for the board to also attend to the way they structure the benefits for members where there's more than, say, 3 to 5 members. According to my view, the way they structure the benefits per member is not fair when there is 1 or 2 members.
Thank you very much. We have taken note of your question, and we will deal with a response later on. We have an agenda item which is referred to as other matters. Ben, can we then attend to it under other matters? Okay. Okay. We will attend to it under item 1.9. Can we move ahead with the approval of the annual financial statements for the period ended 2022? Joanne? Thank you. We have a secondment. Thank you, ma'am. The financials have been approved. Then we can move to the next agenda item, the approval of the trustees' remuneration. We will not go into that matter. We have presented the situation of the fund as it is. And at the preparation of the budget for the year, then it was considered that perhaps an increase in the sitting fees can be considered. But the situation now dictates that the board members have taken a decision that they are not going to increase the sitting fees, so we do not need to address the matter. The sitting fees will remain as is and as was for the period 2022. So there is no need to table this matter. Can we then move to the next agenda item, which is other matters? Alison, is this yours? The members online.
Before Ben starts on discussing the different questions which were raised into my office at the correct time, I always look around and I wonder, 11 years ago or 12 years ago when I joined this industry, I had no idea what risk pool was or reserve levels or deficits. So for those of you who don't know, I'm going to, I'm going to use a strange analogy. I see there's lots of women here who all probably cook. And there's men whose wives cook. I want you to look at your premiums as a pot of food. And everybody takes a little bit out every week, month, whatever. Some people only take a teaspoon. Some will take 2, 3 big spoons. So that risk pool is there for when you really need it. We also, as good mothers, I assume, and good funds, have an extra freezer, pot of food in the freezer. Those are our reserve levels. So I just hope that makes a little bit clearer why we do what we do and what a risk pool is and what a reserve is. Thank you.
Good afternoon, ladies and gentlemen. I'll be dealing with the matters that were raised by members. As you all know, for those that have been members for some time, we always invite members to share their issues with the fund 14 days prior to AGM so that we can prepare a response at this platform. This year was no different. Unfortunately, we were a little bit caught off guard that the matters are not increasing. I don't know whether that's a good thing or a bad thing, but we only had 3 issues raised by members. And today we just want to give those responses to those questions that were, or those matters that were raised. If Tinai, if you could please post if we have them. Yes, just so that I don't have to read through and tire you any further. So we have, like I said, we only had 3 matters raised, and the first matter really speaks to where the member has depleted benefits on the current option that they are on, and they're suggesting that the fund consider upgrades so that they can continue enjoying or getting the benefits so that they can get the medical expenses covered. Now, we've prepared a response, and that's also in the agenda. But really, the response speaks to what Maneni was speaking about in how the medical aid funds are structured. In that we structured around a cross-subsidization and risk pooling model. So where you have, so for example, NMC, you have a good number of healthy members, and then you have others that are not so healthy. In other words, you have low claimers and you have high claimers. Now, where you have your low claimers, like Maneni was in her presentation alluding to, is your low claimers pay for the high claimers. And then in the event that this low claimer tomorrow becomes sick, then the rest of the fund then pays contributions, then helps to cover the expenses, medical expenses of this yesterday's low claimer. So that's, and so generally, because of that's how the private medical aid funds, open funds are structured, we don't generally allow for upgrades when members have depleted the benefits of the option that they're on within that 12-month period. We only then make provision for it for the beginning of the following financial year, where they can then, after having experienced or lived through the experience that they have lived through, then they can then make an informed decision to say, no, the option that I was on was not sufficient for my now medical aid needs. Now I'm making a decision to upgrade to an option that will cover my medical or health needs. So that's generally the fund's makeup. I hope that explains it. And really, it's just getting back to what the actuary of the fund was explaining, the whole risk pooling. So if we can move to the next question or issue. So the next issue that was raised from a member, I think works in the south, and either from one of the mines in the south. Now this member was questioning the NMC other transport benefit. So members, you would you know that the funds, private medical or open funds, have cover for emergency evacuation. Medical aid funds have cover for international travel medical insurance, and medical aid covers funds have cover for inter-hospital transfers that is done by an ambulance, and then medical aid also have what we refer to as other transport benefit. Now the other transport benefit refers to where a member is referred by a medical professional to go for services that are not available where they reside. In other words, in that area where they are, that the services that they now require is not available there. So they are now referred to a provider in a different location. Now, there's a benefit for that under our cover, and for the family, it's 10,150 for the family benefit for the year. Now, the current the member is residing in the south, so the member's concern was, why do you love Windhoek so much? Why I work in the south, but my family is in the north, yes, in the north. Can you not make provision for me that I drive past Windhoek and go to the north and have the services rendered to me there, where I am closer to my family? So that was the member's question. And so from the fund side, we're saying we give you the benefit, the limit of the benefit you have. However, we will, because you are on the other side and the nearest is Windhoek, we will pay you up to Windhoek. And then the base 80% of the benefit up to Windhoek. And then you can then take care of the other side of Windhoek. Because the rule only really speaks to the nearest provider, healthcare provider. So our concern remains, we want you to receive the medical assistance that you require. Right. Shall we go to the next item raised? The last item raised yes, so the last item raised is the one of the regular, I think, questions that members usually ask is the structure of the main member or family and per beneficiary benefit of the fund. So where we are saying, so the family, for example, if I make the use of the previous benefit, no, let me make use of the benefit that the member is referring to, the optical benefit, where we say per family you have, say, 5,000, but per beneficiary you have, say, 3,000. So per beneficiary really just refers to the first person within your family to utilize the benefit can only utilize up to 3,000, so that the remaining 2,000 is reserved for your other members in the family. So that's the current structure of certain benefits of NMC. So the member is asking, but in my situation, I am the only one that uses this particular benefit. Why don't you allow me to use, because I've depleted my per beneficiary limit, why don't you allow me to utilize the rest of the family members' benefits, because the need is still there, and so forth. And so this one, we are saying we're taking this item back to benefit design, and then we look at it at benefit design and see if we can, if there's something that we can, together with the actuaries and the rest of the team, if we can re-look at that benefit. Okay. So those were the responses to the items raised. We encourage this, members raising these matters, not only at AGM, but throughout the year. You're welcome to send through some of these matters, all these matters to us, to the fund, and we will give you, we won't wait for AGM, we will already engage you, and already through the benefit design platform, already try and work on them. Thank you so much.
Thank you, Ben. Ben is our fund manager. I just ask him to not sit down so that we can allow questions or any clarifications that might come up from the presentation or specifically on issues that you might have. But bear in mind that the rules indicate that your question should be sent 14 days. However, since you are here, and since this is an AGM, let us allow you to ask some of those questions. So we have 1, 2, 3. We will take all 3. Ben, you can just note them down. We will try by all means to attend to those ones. If we need more information, we'll probably just take note of it, and then we'll deal with it and give more information as possible. Do we have a mic? Yeah, we can start here. Sorry, ma'am. Can we start there where the mic is near to? All right.
Good afternoon. My name is David, R. David, self-employed businessman. I'm a member. I changed from the opposition. I joined 2 years ago. So I was unhappy there, so I hope I get good service here at NMC. I came from NHP, all right, about 2 years ago. I'm self-employed for me and my spouse and kids. I think my pay about 7K every month from my own business. So I want to know, Mr. Ben, I think you made a point to say the fund does not allow for upgrade of options up until 1st January yearly. So how do we then, if somebody wants to upgrade, let's say now in June, I can upgrade. I'm sure, of course, you do allow the upgrade, but the benefit kick in only starts 1st of January, correct? So it's not allowed. Okay, because I was just concerned to say, I might make contributions for the next 6 months of 7,000 times 5, or for the next 5 months, which are about 35 or 40,000. But then it puts me at a disadvantage as opposed to somebody who decides, in December, 1 month before I'm upgrading on the 1st of January, then they only make one payment and they still will enjoy the same benefits as me who decided prior, months ago, to upgrade. So just give me a rundown there. And also, Mr. Chair, what is your strategy? I saw that you've got a deficit in your report here of about 100,000. And I'm happy that you and your board have got you are driven to save and you're frozen to increase membership or remuneration for board and fees, etc. Because I must commend you for that. Because when there is no profit, normally in business we don't pay or we don't increase salaries and we don't increase board remunerations. So what's your strategy? What's the strategy of the board, you and your team to make up that deficit? Because of course, most of us probably got in the grapevine that there's one fund that's near collapse, going for liquidation and all that, so that we don't reach that point. Thank you.
Thank you, sir. We can take another 2 more questions. Jessica, okay, you can start here and then.
Microphone, or can I?
Yes, you need them.
Thank you. My question is short. How much percentage will the premium for next year rise?
Thank you. Here, Jessica.
Thank you for the opportunity. My name is Mavis. I work for telecommunications industry. The problem is with myself. I've got a hole in one of my chambers, and I've got 6 different blood thicknesses in my body. And because of that, I go to the hospital all the time. And my medical aid was depleted in February already. And I just can't get treatment. And it's so frustrating. You know you have medical aid, but nobody can help you. Roman Catholic looks at my card and she tells me, no, ma'am, there's no benefit. So what should I do? It's something that bothers me a lot because I can die at any minute. So I really need, I saw that you say we can't upgrade in the middle of the year, but for me it doesn't help me listening to that because it's no benefit to me. I need to know what I can do to stay alive for 12 months without going to come into crippling.
Okay.
Thank you. Oh yeah, then another question. I didn't apply, I know ex gratia has an impact on your next year's benefits, but I didn't apply for ex gratia. The last application was in 2019, and ever since I haven't applied anything. But I can't get ex gratia. I called the office after I filled in the application, and she told me there's only they only working on ex gratia for last year's members. So for me to apply for ex gratia right now is of no use.
Okay.
Thank you.
Thank you very much. Alison will take them, but I just want, maybe before Alison take them, I think specific issues like that one, we encourage you then to speak to Alison so that she can give you much more proper advice. It does not only apply to her, it applies to all of us. It's our fund. If you have issues, sometimes you go through your employer's representatives, but you can still contact our office, get the information. You can call, you can send an email, or whatever it is, you can go to the office so that you can then just engage and get the correct information. Sometimes we do not get the right or the correct information. Just by hearing it from the colleagues, we might be demoralized or just take it from there. But I urge that you speak to Alison. She's still with us, so don't worry. So that is on that one. But Alison, please, you can address the
Thank
others.
you. You've been misinformed. You definitely can request ex gratia now for now. There's nothing, last year was last year, so that you have been misinformed. So please send me your details and we'll look into that one further. I think talking on financial sustainability, what you're actually asking, not you personally, but any person who's asking for an upgrade, are saying to the fund, I'm going to give you $1,000 a month more so that I can claim $300,000 after my surgery. And that, unfortunately, will not keep up financial sustainability. Unfortunately, that's the bottom line. But there are options. You're probably on an option which has a cap. There are options with unlimited hospitalization. So I suggest when we discuss this, we will suggest that you upgrade to that. Okay. With regard to your questions, we have a golden ball. We don't know what the premium increase is going to be. We have to see how far we go for next year. But it's possibly substantial. Yes, it's actually... No, not at all. We can't, it's far too early. Thank you.
Yeah, before Ben also comes in, what is our strategy as a Board of Trustees? You will hear from the statement that I've made, and this is on behalf of my colleagues or my fellow Board of Trustees. We are concerned. So when we are concerned, there are two issues. There's a claim that is high, then the premiums that we are getting. There's only two issues there. We can either increase the premiums, which we do not think it is the right thing to do, or we can then contain the claims. But how do we then contain the claims? I don't think the fund has any control on the health situation of the members. But we can only control the claims by engaging the service providers, that they must also try to contain their costs. Because if you are going to the service provider and you are feeling maybe it's cold and you still accept some of the medication, you probably know that you don't need them, but you are still taking them. So that is affecting all of us. So we want you to recognize the situation that we are in so that when you are even visiting the service providers, you ask the questions. Why do I need this? How is this going to assist me? Can I use less so that I can save the fund? But then what we are saying is that as an industry, there is an initiative how we are going to contain this cost. But from the NMC perspective, we are really looking into this matter of containing costs so that the costs can be covered by our premiums. And with the increase in premiums is probably going to be the last thing that we want to do in between. So Ben, perhaps you can then take the others.
Thank you, Mr. Chair. Yes, just to give clarity on the question on when you are allowed to upgrade. So the upgrades, let me give you the actual practical how it happens. So we say 1st of January, but the process starts in December. So what happens is you need to inform the fund of your intention to upgrade. So there's a option change form that you need to complete in December. You forward that to the fund, and then come 1st of January, you are then changed to the new higher option. The payment is done in advance, so you will be billed in December, end of December, for January. Okay, so the premium and the benefits start are effective, or the premium is deducted end of December, the benefit kicks off 1st of January of the following year.
All right, thank you, Ben. By the look of things, I think I see that we want to close. Oh, there's one more. Oh, there's online. 2 interventions from the colleagues online. Yeah, you can go ahead. We cannot hear anything. Can we try again? They are no longer. They've decided not to go ahead. Okay. It seems like there are no more questions from the members online. Oh yes, Alison is saying that if you are unable perhaps then to speak, or we cannot hear you, you can type the questions. We don't need to deal with it here now. We can take note, and then we are going to respond to them. All these questions that were posted, we will also then post them on the website so that you can refer back to the responses. But as Ben have indicated, don't wait for the AGM to clarify on issues. It is our fund, it is open. Approach Met Health, who is the administrator. They will give you all the information. Approach the PO, our principal officer, our fund manager, and everybody at NMC and Met Health. They will then give you the information. On that note, and before I close off the meeting, I just want, on behalf of the Board of Trustees, before I thank you all, I want to thank Alison. This is Alison's last year as the PO of our fund. And this is probably one of the last AGM that she will be attending as a PO. She will continue attending as a member of the fund. We of course will benefit from her wisdom, and we will call upon her when we need her assistance. We would like to thank you, Alison. We really appreciate and we value what you have done and you are still doing to the fund. And on that note, ladies and gentlemen, let me then thank you once again. We don't have any lunch, right? You see the situation that we are in now, we are not even able, we can at least provide some water and some mints. But we would like to thank you very much for your attendance. You've taken time from your busy schedules to be with us. And on that note, the meeting is adjourned. Thank you.
This page is covering the certain aspects of It's medical aid made simple with NMC. Back. Today we're talking about funds. Who makes them? Why do we need them? And how do they get added or removed from the fund? Fund rules are designed to ensure two main propositions. One, that every fund member is treated fairly and in the same way. And two, that the fund remains in a solvent position to be able to continue to provide benefits to members throughout their lives. It's medical aid made simple with NMC. Back up your life. Take peace of mind with you when traveling with international medical travel insurance from NMC in partnership with Holland for emergency medical cover. Be sure to apply for your travel certificate prior